All right, good morning. Good morning. Today I wanted to go over the Orange County housing report, and as you know, supply remains an issue. Today is September 21st. Yesterday we had Jerome Powell speak and let us know what's going on with inflation and what they are going to do with rate increases, and they decided to pause. This doesn't mean that they're not going to continue to raise rates in the future, but today I wanted to talk about what's going on specifically in Orange County, California's market. So as of today, we actually see mortgage rates jump from 7.04% to 7.15% on a 30-year fix. That's 11 basis points. But as you know, if you're in the market right now looking to purchase, supply remains an issue. And why is this happening? We hear all this noise about inflation. You'd think people would start selling and capturing that equity, but here's why. So today's supply dilemma is tracked back to the Dodd-Frank Act in 2010, which was a response to the great financial crisis. So what you're seeing is tighter lending standards in people who actually qualified for these loans. And before the Great Recession, about 35% of all mortgages were adjustable. And today, there's less than 5% of mortgages that are adjustable. So even though interest rates are going up, we still see people locked into those 30-year fixed. So there's one reason why people aren't selling. They have locked in mortgage rates and they do not have adjustable rates. So that doesn't mean people aren't always forced to sell. People will always sell due to illness, death, divorce, job loss. But with the strong lending standards and high FICO scores, today's homeowners are less apt to a financial jam. So right now we're not seeing any sellers wanting to move. But before the great financial crisis, many borrowers had adjustable rate mortgage, and significant adjustments due to a change in the national economy often forced many to sell eventually. The circumstances today has virtually evaporated. So to put this into context, in 2008, over 6 million homeowners lost their homes to foreclosure compared to 22,700 in the first 6 months of 2023. In Orange County specifically, 5,950 foreclosures and short sales were available in August 2008. But today, there's only 5 foreclosures available. That should tell you something. We also have 87% of Californians with a mortgage enjoy a fixed rate at or below 5%. In 2023 through August, there were only 16,741 sellers to hit the market in Orange County. 12,643 fewer than the 3-year average before COVID. 43% less. These missing signs counter any potential rise in the inventory. And with all that being said, to sum up, this just goes to show we're going to have this supply crisis over the next few years. So those waiting on the sidelines, especially in Orange County, this supply crisis may not get better for a few years. So if you're a realtor, buckle up, because there's not going to be as much activity going on in the real estate market. Here in Orange County, we're going to continue to see strong home prices and low inventory. Okay, so demand. The number of pending sales over the prior month increased by 9 pending sales in the past 2 weeks, up 1%, and now totals 1,474, the lowest mid-September reading since 2007. Last year, there were 1,756 pending sales, 19% more than today. That's huge. The 3-year average before COVID, 2017 to 2019, was 2,363, or 60% more homes available. So with inventory falling and demand rising slightly, the expected market time in Orange County, the number of days to sell a listing here in Orange County at the current buying pace, decreased from 49 days to 48 days in the past couple of weeks. It was 62 days last year. slower than today. So if you have a home that's between $750,000 and $1 million, the expected market time increased from 32 days to 33 days. Home price between $1 million and $1.25 million, expected market time decreased from 37 days to 35 days on market. 1.25 million and 1.5 million, the expected time increased from 38 days to 40 days on market. For homes priced between 1.5 million and 2 million, the expected market time decreased 58 days to 55 days. This range represents a 14% of active inventory and 12% of demand. So in the luxury end, all homes above 2 million account for 34% of the inventory and 13% of demand. And finally, for all of Orange County, there's 1,979 closed residential resales in August, which was 9% less than August 2022, and 2,168 closed sales. August marked an 11% rise compared to July 2023. The sales to list price ratio was 99.2% for all of Orange County. Foreclosures accounted for 0.2% of all closed sales. Like I said before, not a lot of foreclosures going on, and a short sales accounted for 0.2%. That means that 99.6% of all sales were good old-fashioned sellers with equity. So people aren't letting go of their homes. We got strong homeowners. The stock that's out there is strong stock, and basically this shortage of homes may go on for the foreseeable future. So if right now is a good time to buy for your family, only you know. But if not, we'll see what happens with mortgage rates. If they continue to increase, this might have an impact on home prices. But again, we're in Orange County. A lot of people have money, and there's basically nothing out there to buy. So we'll see what happens. But anyways, thank you so much for watching. Please like, subscribe, and I'll see you in the next one.